I'm your host, Mike Davis. In today's video, we're going to be talking about the stock market's next move and why this is vital times for any investor out there. We're going to be talking about what happened last week and how can we take what happened last week and pull in and understand what could be coming this week, as we saw the Dow have a massive Friday close to the week, up over more than 700 points. And what does this tell us about what is changing in the markets and what is coming with a massive week of earnings in next week? This is the time to prepare, as we are looking at a lot of information before next week, before the stock market open up tomorrow morning. This is going to be a very crucial week, and likely the next move for the entire stock market is going to depend on this week. We're going to be covering everything and anything that you need to know about this next week and what's happening and transpiring in the markets and what to look at, as a massive earnings reports are coming out all week from major corporations that you need to know about, that are going to be telling us how tech stocks and how these big corporations are planning to place the future of their companies moving forward, after they tell us how Q3 of 2022 ended up going for them. That being said, I'm your host. Sit back, relax, enjoy today's video, hit the like button, subscribe to the channel, and also leave your thoughts and comments down below. All that being said, let's get started. Dow climbs more than 700 points on Friday as Wall Street clinches its best week since June. Now, why is that important? What did we see back in June and July? We saw a little bit of a short-term bottom in the stock market before going on a nice couple-month rally. Could this be shaping up for the same type of future? It could be, because of the information that we are going to be talking about in today's video, and a couple of key things that are happening and changing in the environment of the stock market and what investors are doing. Stocks climbed on Friday as Wall Street closed a volatile week on a high note despite some disappointing earnings report, and we're going to get more earnings reports this week from some major corporations. The Dow Jones Industrial Average gained 748 points, or 2.47%, as it closed at 31,082. The S&P rose 2.37% to 3752, and the Nasdaq gained 2.31%. That's how you want to close a week, on a high note. That gives a lot of optimism going into next week, which will be tomorrow morning. But there's also a lot more information that is telling us that we could be forming a short-term bottom, and that we could see even a little bit of a short squeeze as retail continue to pile on in the short way. They're continuing to bet against this market, but we've seen a sudden change in what corporate money, or big money, or aka smart money, is doing in this last couple of weeks here in the market. So Friday moves extended to the market's gains for the week. The S&P and the Dow gained 4.17 and 4.9% respectively, while the Nasdaq rose 5.2%. It was the best week for all three since June. Okay, so that's a big telltale sign. The advance came despite the 10-year Treasury yield surging to its highest level since 2008, a mixed bag of corporate earnings reports. So really, we've just seen a complete mixed bag. We saw some high notes, we saw some low notes, and now everyone's saying, what is possibly coming next? Well, let's talk about that. So we saw this positive close to the week. We saw the Dow up, the S&P, the Nasdaq, very strong into the week. We are about to come up to the beginning of opens. We're going to see these stock market futures open in just a short minute of time, okay? So we'll be paying a close attention on that, and I will bring you an updated video if anything changes, but likely we're going to see some positivity or a little bit of mixed signals across the board with the futures, with investors just not sure how this week's going to shape out. Be keeping a close eye on this. The other thing you want to keep a close eye on is the DXY. The dollar index had a massive surge Friday morning before falling under 112, which is a pivotal level to be watching out for. If we see continuously daily closes below 112, that's going to bring a lot of optimism back into the markets, and likely going to tell a lot of investors that now might be a good time to start dollar cost averaging the market, and where we could be forming a short-term bottom and seeing a nice little bit of a relief rally, as we do need to understand that it is likely to remain pessimistic with this market, understanding what's happening macro, what's happening around the world, and everything else in between. There is not a lot of bullish sentiment out there. There is more bearish sentiment more than ever, but you need to understand that markets don't trade in one direction the entire way. If you're in a bull market, things don't always just go up and to the right, and same thing in a bear market that we find ourselves in 2022. Things don't just fall in a continuous fashion, okay? So there is going to be rallies along the way, and the question is, how can you be the part of the people that gain from these rallies in the short term? And it's understanding market psychology and understanding a shift like we're seeing right now. What kind of shift are we seeing? We are seeing the SPX aggregated put call ratio to the highest levels that we have experienced in years. What is this telling us? This is retail. Retail is now buying buying the most puts to call ratios that we have ever seen in the last couple of years. This is a telltale sign that retail is extremely bearish right now, and they are going all in on betting against the market to continuously go to the downside. What does this shape up for? It could shape up for a nice squeeze to the upside, giving some relief into the market. As we know, markets like to do the opposite of what the public is thinking. And why is also this a big deal? Well, what are we seeing on the other side? So that's retail. That's dumb money, like the market likes to call it. Now, what is the big money, smart money corporate doing? They are now entering the market in a big way. They are buying more than they're selling, and this is having a steep incline in the coming months ahead. So we are likely to see that we are going to see a showdown between retail and corporate. So what do you want to hedge your bet against? Do you want to go with smart money or dumb money? I would likely tell you to always swim with the whales. Understand what the big smart money is doing. They are buying, they are seeing some type of short-term bottom forming right here, right now, as the sentiment in the overall markets are extremely bearish, which could be in time for a nice relief rally and to really shake out all of these puts and really have a nice clean move to the upside and bring a little bit of optimism back into the market before ultimately we get more news of what's happening with the Fed, what's happening with inflation, what's happening macro, what's happening with the wars. There's so much to unfold in this market, but you got to take it one day at a time. And we are also seeing a massive week ahead for the stock market as we are getting earnings to watch this week. Will be Apple, Amazon, Google, Meta, Microsoft, week of October 23rd. I will break down every single one of these earnings this week, so make sure you are subscribed to the channel. Let me know what your thoughts or opinions of this week. So we have a mixed bag. Friday, we saw a strong close to the stock market here. Dow, S&P, and Nasdaq all green on Friday. We'll be keeping a close eye on the stock futures tonight. DXY also giving us a bullish signal of wanting to continue to break down here. That's extremely bullish for markets, and we are seeing a battle between retail and smart money. Which one is likely to win? We will keep you updated. Make sure you subscribe to the channel. Make sure you hit the like button. And then my name's Mike Davis. Thank you for tuning in to Financial Freedom. I will keep you guys updated every single day about what's transpiring in these market conditions, keeping you one step ahead and bring you anything and everything that you need to know to break down and to beat and to dominate these market conditions. Hit the like button, subscribe to the channel, and I will catch you guys on the next video.